The international property market remains a target for wealthy Gulf investors, but where are they buying in 2018? I'm Eddie Taylor and you're watching Inside AB. Today I'm joined by Richard Bradstock, Head of Middle East for IP Global. Thanks for coming on today, Richard. So tell me a little bit first, how important is property in a wealthy Gulf investor's portfolio?
I think property is one of those asset classes that traditionally has been very important to particularly Emiratis and so on living in the Middle East, but increasingly so for expats and in fact everybody here. It's something that's always in the news and everybody's got an opinion on.
So what are investors looking for when they're buying property overseas? What is it? Is it yield? Is it capital growth? What are the criteria that makes a successful investment in property?
I think the first thing that a lot of people are looking for with overseas property investment is diversity. In terms of whether you're looking for capital growth or rental yields, that's very specific to your personal situation, and so from that point of view, there's not a one-size-fits-all answer. However, given that a lot of people, we see a lot of people with a lot of property based in only sort of one or two locations. Like any asset class, it's important to have a spread, and so we offer our clients an opportunity to do that in international markets. So
talk a little bit about your model. What is it that you do to help Gulf investors approach the international property market in a diversified and balanced way?
What we're trying to do with our clients is always to understand what they're trying to achieve and then provide advice as to how is best to go about that. We're focused on what we would term low-risk, mature markets, such as the UK and Germany and traditionally places like the US and Australia as well, where very sustainable, low-risk returns are available. But the key, or what we offer, I suppose, is advice in terms of, based on their situation, what's actually right for them.
Are we talking about individual units now, like a house here or an apartment there, or are we talking things of sort of slightly bigger scale, like entire compounds or entire buildings?
Well, in terms of what we're offering our clients, it's individual title on units, individual units. We operate a slightly different model to the typical property company. We're not an agent. We're not working on a commission basis with developers. We're not a developer. We're not building property. So what we do is we take a financial position. We actually commit ourselves to buying a whole development where, in a location that we believe, for whatever reason, might achieve above average growth. And then we offer that out to our clients.
Obvious question for 2018, where are people buying?
The UK remains a highly sought after location. It's still the most internationally bought property market in the world. In terms of what people are buying, it's changed a little bit in the UK. So London, which traditionally has been that magnet for money from this part of the world, is less popular, I think, because it's just less affordable. There's less value, albeit there are still locations which work. We're seeing a lot of money, and we're advising our clients to push north to the northern powerhouse, as George Osborne called it. And so Manchester, Leeds, Liverpool. Birmingham's not really north, but north of London.
It'll do. It counts.
Yeah, and then outside of that, we also offer advice into other markets as well. And probably the most interesting market from a purely growth point of view as a country would be Germany, and as a city, Berlin.
What's driving Berlin? Why is that on the radar now, compared to other cities like, say, Frankfurt, which has got an established financial...
Yeah. Look, Frankfurt works as well. We're very keen on Frankfurt. The difference between Frankfurt and Berlin is that Frankfurt is obviously the financial capital of Germany, and given Germany's history of East and West and the wall and all that sort of stuff, Berlin is a city that has only really come into its own in the last few years, and so the relative value of property there is incredibly cheap. So the best way to think about it perhaps is it's like London but at Manchester prices. It's the capital of Germany.
Yeah.
But it's at prices that are just so far below other major world cities, major world capitals. So just from a purely value perspective, we believe it's got a long way to go from a growth perspective.
And going back to the north, there's also entry points are much better value, aren't they?
Yeah.
Like, say, for instance, a one-bedroom apartment within the town centre in Leeds or in Manchester, you're looking at 150, 160,000 pounds, whereas in London, 300, 400, 500,000 pounds for the same square footage.
And upwards from there, yeah. So, yeah, exactly.
And your yields are obviously going to be affected by that.
Yeah, I think, yeah, exactly. The higher the purchase price, the lower the yield tends to be, as a general rule. And so, you know, the north of the UK offers, in our book, it offers both a bit of a double whammy. You're getting decent gross yields, 5-6%, depending on exactly where and what, possibly even higher in places like Liverpool. But you've also got the promise of growth thanks to regeneration and sort of the money that's being poured in, both from a government level and private investment level, plus obviously they're great university cities, and so they just offer both that yield plus growth story. Whereas at the moment, the reality is London probably over a 10-year period will still offer growth in the right areas, but no one would buy London from a yield perspective, or should buy London from a yield perspective.
So sum it up for us. Why is property still a really good investment?
It's the risk element. In the end, it's the old cliches of bricks and mortar. You buy a property in the right in a good location for the right price. Somebody's always going to need to rent it. Somebody's always going to buy it from you because people need to live somewhere. And so as long as you do your homework and you buy the right asset, it's about as low risk an investment as you can make.
So it seems that the wealthy Gulf investors are no longer looking at London, but trying to diversify their portfolios to the north of England and to Berlin. Should be a very interesting year ahead. Thanks for watching Inside AB. Don't forget to subscribe to our YouTube channel and join us every day for more on Inside AB.